So I'm very pleased to have two people from Kiva to give us an introduction to crowdfunding. Kiva has crowdfunded 2 million entrepreneurs around the world with almost $1 billion in microloans. In this webinar, the Kiva team will highlight the potential of crowdfunding to empower entrepreneurs with both financial capital and social capital. Learn about the different types of crowdfunding options, debt, perks, and equity, and how to make your crowdfunding campaign successful. Our presenters today are Johnny Price, who launched the Kiva Zip pilot program at Kiva in 2011 to crowdfund 0% interest loans to financially excluded entrepreneurs in Kenya and the United States, and now leads the U.S. lending division at Kiva. And Mick Yuan, a small business program director at Kiva, a small business development specialist and entrepreneur. Johnny and Brian, welcome. Johnny,
please.
Thank you
so much.
Thank you. Take it away.
Great. And are you able to advance the slides for me?
I will. I'll go ahead and do that for you. Just tell me when you want to advance.
Yeah, so you can advance a couple probably. Guys, my name is Johnny Price. As was mentioned, it's a pleasure to be talking to you today. I'm originally from the UK, from London, but I moved to America. I married an American girl a few years ago, and since 2011, I've been leading the Kiva US program here at Kiva. What I want to do today is 4 things. Firstly, give a brief overview of what crowdfunding is. Secondly, then highlight some of the pros and cons of crowdfunding versus other sources of funding. Thirdly, give a few tips on how to succeed in crowdfunding. And then fourthly, really give you guys a chance to ask any questions that you might have that come up. And as was mentioned, there's a Q&A section in the webinar, so please do ask questions there and we'll answer them towards the end. One thing I will say is, I already saw there's a question from an entrepreneur in Tunisia, one in Ivory Coast, one in Pakistan. This is so exciting to see all the engagement from around the world. Obviously, I'm not going to have time in this hour to go into details on crowdfunding platforms and options in your specific markets. So this is going to be more of a high-level overview, but hopefully we will give you some good ideas and maybe guide more in-depth research that you can do into crowdfunding options in your particular markets. So on the next slide, probably flick one more. So to start with a brief intro to crowdfunding, this image, which you might recognize, is the image of Wikipedia encyclopedia. And I show this image to make a point that crowdfunding is about democratizing access to capital. It used to be that encyclopedias were written by encyclopedia editors who would have the final say in which articles went into the encyclopedia, and they would be kind of central gatekeepers in deciding, what the encyclopedia looked like. These days, Wikipedia is the biggest and best encyclopedia in the world. It's orders of magnitude bigger than the next biggest encyclopedia. It's being continuously updated, so it never goes out of date like encyclopedias of the past that were books. And it's totally free for everyone in the world to use. And it's happened because any of us can democratically write the encyclopedia rather than that editor acting as the gatekeeper. And for me, crowdfunding is taking that principle and applying it to the finance industry. So rather than the banker getting to decide who gets a loan, or the venture capitalist, or the centralized institutional gatekeeper, we can now democratically vote on which entrepreneurs are able to access the capital they need to launch or grow their business. And so we believe this democratic approach to funding small businesses like yours can lead to more equitable outcomes and can significantly expand access to capital beyond where conventional lenders and conventional financial institutions have been in the past. So this is one of the things I'm most excited about working at Kiva. Kiva has 1.7 million lenders around the world, and in increments as small as $25, they can democratically vote on which entrepreneurs are able to access loans through our platform. So on the next slide, And one more. I saw this picture the other day, and this is one of the things I hope that crowdfunding can do. I think our current finance system looks like the picture on the left. The finance system that we've created for ourselves in this global economy. Actually, I think it probably would look more like one where the boxes are stacked. So the tall person on the left has all the boxes. We really make it easy for people that already have money and already have access to resources and capital. And then we make it hard for the little guy, hard for the startup entrepreneur. And what we're trying to do, and what we hope crowdfunding can do, is create a financial system that looks like the one on the right, where we're giving a hand up to people that are currently being excluded or left out of the mainstream financial system. We believe crowdfunding can lead to a more equitable finance system. On the next slide. So I want to highlight I see there as being four main buckets of crowdfunding. The first is donations. So GoFundMe has really grown as a platform. These are three examples of crowdfunding platforms that use donations. And most GoFundMe campaigns are someone raising money, and the people that are funding that project are just donating money to that project owner. And so you see some entrepreneurs on GoFundMe. Usually it's more for personal causes, like I want to go on this vacation, or I have this medical expense that I'd like help in fundraising for. But sometimes you see entrepreneurs on there as well. The second, if you click forward, the second and probably the most common thing that people think of when we talk about crowdfunding is rewards or perks-based crowdfunding. So personally, I think probably the most famous crowdfunding brand is Kickstarter, other than Kiva, of course. But Kickstarter and Indiegogo there are two of the most popular crowdfunding platforms here in the United States. Ulule there is a French crowdfunding platform, and Flying V, I believe, is the biggest perks-based crowdfunding platform in China. And how this works, as you guys probably know, is that you might, as an entrepreneur, you might want to raise $10,000 to launch this new product line, and you basically sell products at a discount ahead of time using Indiegogo or Kickstarter. And so let's say that normally your T-shirt you would sell it for $25. Well, on this crowdfunding campaign, you sell it for $20. And that is the reward, that is the perk, and then the people that are backing your project are getting, these products at a discount. So that's what's in it for them. They're getting a discount on the product, and as the entrepreneur, you are essentially getting capital. You're raising capital by pre-selling products. And of course, perks don't need to be products. You have some people, maybe what a cool perk was that. Someone is writing a book or a screenplay or putting together a movie, and one of the perks, if you fund $1,000, you get to have a character in the movie named after you. So perks and rewards can get very creative, but that's the second bucket. The third bucket then is debt, so loans. And Kiva there is at the top of the list. One thing I would highlight here, and the reason why I maybe cheekily put Prosper and Lending Club there in gray, that I think you've got to be a little bit careful to distinguish between crowdfunding of loans, which I see as being Kiva's model, versus maybe P2P lending, which I see is often what Prosper and Lending Club are referred to as. And the difference that I would emphasize there is the level of connectedness between the investors, the lenders that are crowdfunding the campaign, and the small business owner that is the borrower of this loan. And I'll talk more about this later, but one of the great benefits of being a small business owner that raises money on Kiva is that if you are crowdfunded by 148 lenders from around the world, you can engage with them and interact with those 148 people. They can become your customers or give you business advice on our website, They can become your brand ambassadors by clicking through to your Facebook page and liking your Facebook page. I think with P2P lenders, usually the connection isn't really there. So sure that the borrower is having those loans and it's coming from individual people lending, but they can't see who those people are and they can't connect with them, engage with them, they can't market their business to them. And so that's one just kind of distinction that I would draw your attention to between true kind of crowdfunding of loans, which I think Kiva epitomizes, versus kind of slightly more disconnected P2P lending, which Prosper and Lending Club would represent. And then the fourth type of crowdfunding, in a very interesting space that's seen a lot of activity over the last few years, with some regulations and legislation that went through the American Congress. There was an act of Congress called the Jobs Act, passed a few years ago. It stands for the Jumpstart Our Business Startups Act. And that really liberalized regulations around equity-based crowdfunding. And so some examples of equity-based crowdfunding platforms here being AngelList, WeFunder, and CircleUp. And so just as a startup can, basically have venture capital investors or angel investors give them seed funding in exchange for equity, and usually that seed funding might come from a venture capital firm. With equity-based crowdfunding, now you can basically have investors buy equity stakes in your company in a much more decentralized, democratized, distributed way. And so equity-based crowdfunding, again, has been growing very fast, and I think we'll see some significant growth, not just in America, but throughout the world over the coming years. So on the next slide, so this is just a really interesting chart, I thought, looking at the growth of venture capital funding in red versus crowdfunding in blue versus angel investing in green, and it's just to show that there's been a lot of exciting growth in the crowdfunding space over the last few years. I think that growth is going to continue. And if you think about kind of general trends in the economy and in society, we have had taxis very much disrupted over the last years by Uber and Lyft. We've had hotels disrupted by Airbnb. We've had encyclopedias disrupted by Wikipedia. We've had media disrupted by Facebook and Twitter. And for me, crowdfunding is the analogy of the finance industry. So again, I think this blue line will continue to accelerate over the coming years, kind of per the democratization point I made earlier. On the next slide, this is just a quote from the former New York Stock Exchange CEO: "Crowdfunding will become the future of how most small business owners are financed." So that's kind of an overview of crowdfunding. Please, again, do drop questions down in the Q&A section. But I'm going to move on to some of the pros and cons of crowdfunding versus other sources of funding. This is a really cool success story. This is often heralded as one of the kind of breakthrough successes of crowdfunding. This is Pebble Watch campaign on Kickstarter. They just passed $20 million that they raised, basically by selling these digital watches. This was a precursor to the Apple Watch, but they raised $20 million from 78,471 backers. And I think what this success story illustrates is a few things. The two I would highlight are, firstly, you can raise a lot of money if you have a very successful crowdfunding campaign. These guys raised $20 million on Kickstarter. Now, it's rare to raise that much money, don't get me wrong. You can't just put your business on there and watch the money roll in. But there are success stories where people raise millions and millions of dollars. You can raise a lot of money if you have a great product and if you have a really good approach to marketing your product and your crowdfunding campaign. The second thing I would highlight is that, as you can see at the bottom, there were 78,471 backers on this project, and you could call a backer a customer, right? So basically those people, I think, were buying Pebble watches at a discount. They were pre-ordering these products at a discount, and so that is 78,471 customers. And what an amazing way to get customers for your product. And hopefully those customers are going to maybe become repeat customers or spread the word to their networks. And so not only is crowdfunding a great way to get money, but it's also a great way to get customers. And if we go back to that slide that I was mentioning on the debt side, that's why I put Kiva in green and Prosper and Lending Club in gray, because one of the great benefits of getting a loan on Kiva is that you get potential customers and brand ambassadors for your business. That's one of the great things about crowdfunding. If you get a loan on Prosper and Lending Club, which are great companies that do great loans, you don't get any customers as a result of that. All you get is the money. And for me, the beautiful thing about crowdfunding is that it gives you not just financial capital, but social capital and customers too. So on the next slide, I just kind of make that point again. So like Pebble, you can raise a lot of money if you click through. It's relatively cheap. So that $20 million that was raised for Pebble on Kickstarter, that wasn't a loan. They didn't pay any interest on that loan. They didn't even have to pay that money back, and they weren't giving away equity in their company. So they weren't diluting their ownership of the company at all. It's just selling a product. So it's revenue rather than debt you have to pay back or equity that you're giving away. If you click again, so I mentioned this point already. We talk a lot at Kiva about building social capital for our entrepreneurs, as well as financial capital, cultivating brand ambassadors, business advisors, and customers, as well as getting interest-free loans. So on the next, this is a quote from Ethan Mollock. He's a professor at Wharton. The unique value of crowdfunding is not money, it's community. And I just thought that quote really kind of epitomized what I'm trying to get at here. On the next slide, so and this is an example of a Kiva loan. This is my Kiva lender account. You can see that I currently have $196 of credit from loans that I've made over the last decade who are currently paying me back. And every day now I get a few cents of repayment on a loan that I've made in the past. And so then I obviously need to go back in and make another 7 loans, $25 loans, and lend that money out to help more entrepreneurs. But this is Jane. Her business is called 350 Degrees Bakery in Pittsburgh, Pennsylvania. She's raising $10,000, and she's only got $3,125 to go. And she's had 88 lenders that funded her business. And again, that's 88 potential customers for her bakery, 88 people that can be writing her Yelp reviews or connecting with her on LinkedIn and giving her business advice. The next slide, I just talk about some of the potential cons of crowdfunding. And the first one to make very clear, it can be hard work to raise the money. Like I mentioned earlier, it's not like, oh, just kind of create an Indiegogo page and then watch the money roll in. It is hard work. I've had entrepreneurs describe it to me as a full-time job. You've really got to kind of aggressively promote your crowdfunding campaign oftentimes to your network. And so I would just kind of warn you guys up front. And it depends on the platform. So one of the things that we're proud of on the Kiva platform is that we try to make it as easy as possible for people. But the level of work that it is, I think it's manifested in the success rates. So on Kiva, 90% of the loans that we post publicly to the website, 90% of them reach their goal. But I've heard that for other crowdfunding platforms, the success rate is much, much lower. For some, it's kind of 15, 20% of projects reach their goal. So that just illustrates, I think, it is hard work to do this well. If you click again, the other thing is it's not just hard work to raise the money in the first place, but I've heard from entrepreneurs, even after you raise the money, you shouldn't underestimate the work that is involved here. again, that depends on the platform. So with Kiva, all you've got to do is pay the loan back. But with an Indiegogo or a Kickstarter campaign or a rewards-based crowdfunding campaign, you've got to fulfill the perks, right? So someone once joked that, you know, one of their perks was, oh, if you give me $10, then I'll send you a handwritten thank you note. And they really underestimated how hard it is to, like, the strain on your wrist to write hundreds and hundreds of handwritten thank you notes. But it is sometimes hard work to fulfill the perks after your project succeeds. So again, don't underestimate that. And then from an equity-based lens, you know, if you have a small number of VC investors, venture capital investors, invest in your business, let's say you have 3 VC firms invest in your business, that's 3 people that are asking you questions and feel entitled to know, you know, details about the business. If you have 300 people back you in an equity-based crowdfunding campaign, that's 300 investors that you have in your business. And, you know, on the left-hand side of this slide, that's great. That's 300 potential customers, brand ambassadors who are now trying to help you grow your business because they want the business to succeed. Because if the business succeeds, then their equity stake increases in value. On the other hand, you know, that's now 300 people that can ask you annoying questions and take up your time and feel entitled to know information about your business because they are an investor in your business. So again, there's kind of pros and cons to having 300 investors or backers to your crowdfunding campaign and investors in your business. And then the other thing I would say with respect to perks-based crowdfunding is that you have to get the economics right. Obviously, that goes without saying. But, you know, let's say in that example I gave earlier, rather than giving the T-shirt away for $20, let's say you gave the T-shirt away for $10 because you really wanted to get more people kind of backing your crowdfunding campaign. Well, if the T-shirt costs $8 to make, but then it costs $3 to ship, now you're losing $1 for every T-shirt that you sell. And so it's really important to get the economics right. Some people see Groupon. I'm not sure if you guys remember Groupon. I mean, it's still around, although I think it's the growth rate has really slowed over the last few years. Groupon was one of the fastest ever growing tech companies a few years ago. And they were basically giving discounts, so you could get a 50% discount on a massage or a 50% discount on a meal at this restaurant. And it's kind of similar to crowdfunding in a way, I think. You could say it was like perks-based or rewards-based crowdfunding. But I think that a lot of businesses kind of miscalculated the economics. And so they just basically, like, let's say you just kind of give away a discount on a product to customers that would have bought that product anyway. If you don't get any more customers, but you just give away value by lowering the price, then all you're doing is hurting your economics. So you do have to think through the economics, especially on the perks-based approach. So on the next slide. So a summary, kind of who should do crowdfunding, I would say it should definitely be people that are willing to put yourselves out there. So you've really got to, especially with a platform like Kickstarter or Indiegogo, you've really got to be willing to put yourself out there, aggressively market yourself and your business to your networks. You know, if you're someone that is kind of shy about talking about finances publicly or reluctant to get people to invest in your business in a public forum, then crowdfunding is not for you. You know, this is very public. There's going to be people that get to see it that you don't know on the Kickstarter website. They're going to ask you questions. So you should do this only if you're excited about sharing this publicly. And sometimes entrepreneurs have concerns about, you know, intellectual property or, you know, kind of competitors stealing the secrets of their business model, and so are reluctant to share that information in a public forum. Again, crowdfunding probably not the best route for you as an entrepreneur if that's, you know, considerations that are important to you. And then the second thing here is that having an existing network helps, and the stronger the better. So you can overcome limitations here through hustling hard and being creative and being entrepreneurial and coming up with creative ways to market your campaign and get people to come in. But generally speaking, if you have a strong network, that's very powerful because you can go to them and get them to get the ball rolling on your campaign and really help you get traction early on. And most crowdfunding platforms, certainly Kiva, this works this way. Most crowdfunding platforms, the kind of default view of projects that you're going to see is basically, the projects that are popular and a lot of people are contributing to then get promoted more, right? So if you can go out of the gate really strong and if you can have a lot of people from your network come in and really inject a lot of momentum very early in the campaign, then you'll start to get bumped up the rankings, and then more kind of visitors to Kickstarter that you don't know will see your project higher up the rankings, and then that will kind of propel it further. So it's a very virtuous cycle. If you click again. And then within each of those four areas of crowdfunding that I mentioned earlier, I think equity-based crowdfunding would be right for you, primarily if you have an exit route. So if you're like a coffee shop that is never going to kind of get really big, you're never going to have a IPO, you're never going to be bought by Starbucks, it's always going to be, I'm going to have this one coffee shop, then equity-based crowdfunding isn't probably a good fit for you because there's no exit where your equity-based investors can cash out, which is kind of why they're going to be investing in you. To succeed in rewards or perks-based crowdfunding, you usually need a cool product that people are going to be excited to see and buy, whether it's a really cool T-shirt or whether it's that Pebble watch that we saw earlier. So again, like a coffee shop is probably not going to succeed in rewards and perks-based crowdfunding. Maybe you can give people a discount on a cup of coffee when they come in, but I'm not really sure if a big crowdfunding campaign is the right way to go about that. On the donations side, honestly, I would say donations are probably less relevant for small businesses. Occasionally, if the business has a really cool social impact, you might get folks that are willing to donate on a platform like GoFundMe. But I would not really encourage entrepreneurs to go down the donations-based crowdfunding route unless it's a really exceptional circumstance. Also, if I was an entrepreneur, I wouldn't really want to raise donations for my business. I'd kind of want to, for me, it would be a source of pride that I was looking to repay loans that investors were investing in me, or kind of give them a share of equity for the money that they're giving me, or kind of give them a product in the rewards-based model. So personally, I would say donations is less relevant for small businesses. And then debt-based crowdfunding, the cool thing about the debt-based approach is it's more easily accessible to all. All right, so on Kiva, the entrepreneurs that we fund are from throughout the spectrum. Like the coffee shop that I mentioned just now, they could fund on Kiva. They could fund a $10,000 loan on Kiva very well. Our lenders love lending to coffee shops. You don't need the exit and you don't need the cool product. So we can lend to the coffee shops and the plumbers and the mechanics and the landscape gardeners that are probably not a good fit for either equity-based or rewards-based crowdfunding. The downside of the debt model, obviously, is it's a loan and you have to pay it back. The $20 million that Pebble raised on Kickstarter, they didn't pay any of that back. That was all revenue for their business. Obviously, they had the cost of the watches as the products. But on the debt side, it's a loan. You have to pay it back. And on the next slide, so I'm just going to spend a few minutes talking about, at a very high level, some things that are important to succeed in crowdfunding, and then we're going to open it up to any questions that might have come in. The first thing is obviously choose the right platform and funding type that works for you. So that kind of overview that I gave a couple of slides ago is a good kind of high-level way to think about which of these four buckets is the right fit for you. And then within those buckets, definitely do research on the platform, right? So again, like I mentioned earlier, I can't kind of go into specifics on what's the best crowdfunding platform if you're in Tunisia, or what's the best crowdfunding platform if you're in Pakistan, you know, or wherever you might be. So do the research, you know, and if you just Google biggest crowdfunding platforms in Tunisia, then you'll find the ones at the top, and you can kind of double click and do a little bit more research into which ones you think might be best for you. And then ask for advice as well. Absolutely ask for advice. Speak to people that have just reach out to the, let's say you go with Kickstarter, or you want to do some research on Kickstarter. Find a project on Kickstarter in your country or in your city, in your neighborhood. Reach out to that project owner. I'm sure they'll be happy to chat with you and give you some tips and advice. And ask them, you know, was this a good experience? What lessons did you learn? What do you wish you'd known going into this? And I really can't stress enough figuring out, okay, do I want to go with rewards or debt or equity or donations? And then which platform do I want to go with? And getting your strategy right at the outset is absolutely fundamentally important. And don't get going before you've put significant research into that. On the next slide, high quality content is absolutely imperative to succeeding in crowdfunding. So this is a really cool photo that I love of this barber, Sebastian. His business is based in Detroit, Michigan. We made him a Kiva loan, but I just love this photo. He's there in his barbershop with a very kind of pensive look. It's beautifully lit. But you know, you've got to make the photo. If you're on Kiva, we do photos, so make the photo really compelling. A beautiful photo that people can kind of immediately get a sense of your character. And then, you know, if it's on Kickstarter, the video is really important. So make sure that you put together a great video. And obviously, as with anything, ask people for advice. So I'm not a designer. I'm not really a marketer. So if I was to take a photo then and put it up, it probably wouldn't be a very good one. So I go and ask my friends who are into photography and into design and into marketing, and get them to help me figure out what's wrong with it and give feedback on how to improve that. And then also, you know, tell a really compelling, authentic story. Crowdfunding is about connections. So tell your story in a way that's engaging and authentic, and people get to know who you are as an entrepreneur, and your story, the story of your business, as well as this product that they're buying. And then, you know, crowdfunding is a lot about transparency. So make sure you're giving people the information that they need. And again, if your business is really based on kind of strictly confidential intellectual property rights, and you really are reluctant to kind of have potential competitors have an insight into your business strategy, crowdfunding is probably not the best funding source for you. On the next slide, if you are doing a rewards-based campaign, then obviously it's important to get the perks right. So I just took this screenshot from the Indiegogo website. So this perk was $30 for this cube tunnel product. Give people a range of options. You know, people should be able to get involved for a small amount and going up to a large amount if they're really, really passionate about the project. Make sure that it's good value, and again, get advice. Like, show your list of products to friends and say, hey, you know, would you do this? Would you buy this? How much would you need to lower the price in order for you to commit to funding this? Clearly describe the products. Get creative. There are some really cool and creative ideas. If you Google kind of most creative crowdfunding perks, you'll find some really cool examples. And then, as I mentioned earlier, get the economics right. In this example, make sure that the cost of producing this tunnel and the shipping is less than $30. Otherwise, you're going to run into difficulties. Goes without saying. And then on the next slide, I would kind of, this slide talks about promoting deeply, and the next slide talks about promoting broadly. So when I say promoting deeply, I mean go to your network and make sure that you really kind of focus on getting your closest friends and family to seed initial traction and momentum in your campaign. It's not enough, it's not going to work to just post a Facebook post or tweet about your crowdfunding campaign. Get on the phone to your parents, get on the phone to your siblings, get on the phone to your close friends and family and say, I've got this campaign, it's going to launch tomorrow, I really, really want to get momentum going early. Will you commit to doing this and backing my campaign either as an equity investor or a lender on Kiva or through buying a perk? Get them to commit by talking to them on the phone or meeting with them in person. Meet with them in person for a coffee and walk through it with them. They might be intimidated. Maybe they've never backed a campaign on Kickstarter before. They might not be able to figure out how to register for a Kickstarter account and use their credit card online. Some people are more kind of adept at using technology than others. So meet with them in person, hold their hand and walk them through it to do it. That's what I mean by promoting deeply. Make sure that you get your closest friends and family to commit by engaging with them one-on-one and getting them to commit to this. And then the next kind of, that being said, of course, on the next slide, you also need to promote to social media. You also need to send a blast to your email list. You need to do the broad promotion as well as the deep promotion. Try to get bloggers or media sites, a blogger that focuses on the industry that you're in. Can they cover your campaign? A lot of crowdfunding campaigns these days are doing advertising on Facebook or another advertising platform to drive visitors to their crowdfunding campaign. Can you get backer virality going? Can you give a referral bonus to a backer that brings in another backer, et cetera, et cetera? And obviously hustle hard. Your crowdfunding campaign might be for a month or a couple of months. In those couple of months, really, really work hard. And again, depending on the platform, you are going to need to work really hard in order for it to work. So, and I think the last thing I'll say is just to highlight a little bit of a plug here for Kiva. Kiva works with microfinance institutions throughout the world. We lend in 90 countries, but it's only possible to apply for a Kiva loan directly on our website if you're in the US. So for the folks that are international, apologies, this isn't appropriate for you, but if there are entrepreneurs on the line in the United States, I think this could be a really good option. Please check it out. We do 0% interest loans up to $10,000 for any small business owner, even folks with damaged credit scores, even folks that are new early stage businesses that don't yet have any history of revenues or cash flows. And as I mentioned earlier, we make crowdfunding easy. Because we have 1.7 million lenders like me, if you guys remember from the slide before, I have $196 in my Kiva account. I'm going to log on later today and just browse through loans and lend them $25. And that doesn't really happen as much in other crowdfunding platforms. And because I'm getting money paid back into my lender account, I can just re-lend that money very easily. And so that means that whereas on other crowdfunding platforms, I've heard basically you have to bring 80% of the capital and then their network brings 20%. On Kiva, we kind of see the other way around, which is you have to do a little bit of work to get it going. Maybe you bring in 20% of the loan volume, so $2,000 on a $10,000 loan. But then our network brings in the remaining $8,000. And as I mentioned, we have a 90% success rate, which is very, very high for crowdfunding platforms. So if you want to learn more, if you're a US-based small business owner, you can learn more at kiva.org/borrow, or you can email us at borrowers@kiva.org. And hope we might hear from you and be able to help your business, not just with a zero-interest loan, but also by connecting you to hundreds of lenders that are backing your business, now investors in your business, and wanting your business to succeed by promoting it or even becoming your customers. And I think that was all I wanted to cover. I don't know if there's been any questions asked, or if anyone on the HP Life team might have any other questions to follow up. Yeah.
Yes, thank you, Johnny. This is Grace from WorldSkills, and thank you for that very interesting and useful presentation about crowdfunding. From our side, I'd just like to ask some questions we've received during the presentation. The first question is about what would you advise in terms of at which stage of developing a business should someone start planning for crowdfunding? Is there a right timing for it?
Yeah, that's a really great question. I think it probably depends on the platform. I think one of the cool things about crowdfunding is that you can get people to come in very early. Even before you have a product, for example, you could get funded on Kiva with a debt-based product, a debt-based crowdfunding campaign, or an equity-based crowdfunding campaign. But you know, and with the rewards and the perks-based campaigns, one of the cool things is you can run a crowdfunding campaign and you can say, basically, you know, on Kickstarter, okay, if I raise $100,000, then I will have enough money to go out and make this product, right? And so even before you've made the product, obviously you've got to, in order to raise $100,000, you better have some pretty good mock-ups and some pretty good thoughts and strategies about how you're going to make this product. But you know, you can raise the money, the $100,000, even before you've made the product, because you know, especially with Kickstarter, the whole point is you can raise that money in order to then go and make the product. So I would say no, that you know, there isn't a kind of right time to raise money. Or what's one of the cool things about crowdfunding is you can raise money before you have a product. You can raise money down the line. You know, you can raise equity-based funding at a similar time to when you'd go and raise equity from a venture capital firm in a more conventional model. So again, one of the cool things about like the democratic nature of crowdfunding is that it kind of expands your options, and you know, where conventional financial investors, be it banks or VC firms or angel investors or whoever, they might have a kind of a standard approach to doing things. One of the cool things about crowdfunding is that you know, that standard approach, you can kind of bend the rules and paint outside the lines.
That's very good to know. So that really depends on the objectives of individuals.
Yeah.
Okay. So the second question is, you've probably mentioned it briefly in this area when you talked about who should do crowdfunding, but are there other major or common mistakes do you think people usually have when they try to do crowdfunding based on your experience?
Yeah, I think so. I think that, I mean, I'd say the most common mistake is that people don't do a good enough job of promoting their crowdfunding campaign to their network. And they just think, oh, if I get a project up on Indiegogo, then the money is just going to flow in. And it's not that easy. I wish it was that easy. You know, so you really do have to be willing to go out and promote deeply, as I mentioned. Get your friends and family to commit to backing you and giving your campaign some traction and momentum in the early days. You know, like no one who's browsing through Indiegogo campaigns is going to want to back the campaign that has $0 and 0 backers, right? If I'm browsing through a list of campaigns and I see one that has $0, it's like, oh, well, that one looks weird. No one else is like, you know, wanting to fund that. That must be kind of high risk, or that must be sketchy. So I'm going to avoid that. There's a lot of power in social proof. We find that on Kiva, you know, projects that have hundreds of lenders tend to fundraise faster. There's a real kind of acceleration. So that, I think, I would highlight as the biggest pitfall for people is that they are not willing, or they're not able to work hard to promote the project to their network.
Right, and I think that actually leads to the next question, because we know that it's very important to develop a high quality content, and that's how you really get to promote it strongly. Like the photo you showed us in the presentation, could you share with us what other resources does Kiva provide to help the borrowers be more successful?
Yeah, absolutely, and you're right. So in Silicon Valley, there's this kind of dichotomy between product and distribution, and one version is if you build it, they will come, and that basically says if you create a world-class product, you don't need to focus on marketing or worry about marketing, because people are just going to use that product and love it and spread it, and it's virally going to take over the world. And so Pokemon Go, for example, took over America a few months ago. Everyone was on their phones chasing after whatever they were, monsters or something on Pokemon Go. And, that just virally exploded in a few weeks. It was amazing. And that's an example of if you build it, they will come. I doubt Pokemon Go spent much on marketing. It was just a beautiful product that spread virally. On the other hand, then you've got a paradigm where distribution is important. And so when I talk about you've got to aggressively promote your campaign, I'm talking about distribution. And so I think distribution is important in crowdfunding. And however good your photo is, however compelling your story is, however good value your perks are, I think that you need to work hard on the distribution side at marketing your campaign. That being said, yes, of course, if you have a good product, e.g. if you have a great photo or a great video, or if you have a digital watch like Pebble that people really love and you're selling it at a discount that people think they're getting really good value for money, then you're gonna be able to get a lot more traction when you do go out to your network and try to market your campaign. And so then the question, as you said, Grace, turns to, well, then how do you make sure that your content, your product, in this case I'm referring to product as your photo and your crowdfunding campaign, how do you make sure that that's great? And there's some great resources online. So again, if you just Google, how to succeed in crowdfunding, or how to make a great crowdfunding campaign, you'll see some great online resources. At Kiva, we dream of reimagining a finance system based on people and based on human relationships. And so, my answer to your question, honestly, is we have an awesome team of people like Brian, who's on the line, in Oakland, California, like Catherine in New York, like Ty in Baltimore. And we have a great team of people who are going to work with you and hold your hand through the process. And if you take a photo that we know it's not going to work, we'll let you know in as gentle a way as possible and kind of give you some guidance on how to improve that photo, how to improve your the business description, and how to improve your campaign and really set you up for success, so you can be in that 90% of our small business owners that are successfully reaching the goal they have with Kiva.
Okay, so
thanks, Johnny. Hey, Grace, I wanted to mention as well too, the other things that that we help bring as well too is that we try to help as well our borrowers. One of the things that's really valuable is that half of our borrowers are just starting their business, and so business credit is something that they're able to kind of build, and credit is something that a lot of these small businesses don't have. We also provide, so we kind of talk a little bit about that. We also, our goal is to introduce our small businesses to the broader community. So not only do they network amongst other Kiva borrowers, but we also try to promote their product or services to other businesses and other groups within the community that can help support their businesses. And then thirdly, I think is that there's a lot, we have trustees, which are basically other public organizations that provide some kind of technical service resource, like a great group like Central Community Partners or the Unity Council that help Latino entrepreneurs in Oakland. And so we try to provide resource referrals that other small business people might need in order to help grow their business.
Thank you, Brian. Thank you, Johnny. I think that's really great to know that Kiva has a dedicated team that really customized to the needs and also a very strong network that people can get introduced to.
Service with a smile, Grace. That's
yes,
Kiva.
definitely.
Quality service with a smile.
For sure. Great. The next question is about, so someone has this community project and would like to do crowdfunding, but instead of crowdfunding for cash, is it possible or common to do a crowdfunding for equipment like computers or printers for an educational lab, for example?
Yeah, that's a good question. I'm afraid I don't know of any platforms where you can do that. What I would do, and what would work, I think, pretty well, is whether on Indiegogo or GoFundMe could be a good platform to run that campaign. It sounds like more of a donations-based campaign where you could, just kind of basically say, okay, we need to buy these computers. They're going to cost $5,000. And so we raise the money. We raise the $5,000 that we can then use to go and buy the computers. But I get that the question is more around like, well, it might be hard to get someone to give us $5,000, but if they could give us a computer, that might be easier. I'm afraid I don't know of a platform that exists there. It might well exist, but I don't know of it. You should go and start it.
Yeah, that's a business idea right over there.
Exactly.
Okay.
Launch that business with a crowdfunding campaign. You could get the computers that you need to start the business through the crowdfunding platform that you're building.
Great to know that. All right. I think that's all the questions that we have received so far. I don't know, Debbie, would you like to take over, or would you have any questions?
No, I don't have any additional questions. I just wanted to thank everyone for attending today. I think this was a fabulous webinar, lots of great information. Thanks, Johnny and Brian, for providing that information. And I just want to remind everybody that we do have one more upcoming webinar. It is Scale and Grow Your Business with FounderScope. So please register for that if you have not already done so. So this concludes the webinar. And again, thanks for everybody for attending.
Thanks so much, guys. Have a great day.
Thank you.